Alright, hello everyone. My name is Tyler White. I'll be going over Chapter 5, Exercise 7. Right here what we have is basically what is a multi-step income statement. We have to fill in these blanks. So objective number 1, we have to learn the equations so that we can get specific values on our income statement. And when we have these values, we can better identify and highlight the components of net income. So below what we have is the table of equations. And what net sales is revenue minus sales, return, and allowance. But we're trying to find sales, returns, and allowances. So all we do is subtract 90,600 sales revenues minus net sales to get a difference of 8,400. Perfect. And then for gross profit is net sales minus COGS, or cost of goods sold. We have the cost of goods sold and we have our net sales. And so do the math. And we get 27,800. And then net income is sales revenue minus the expenses, or in this case, gross profit minus operating expenses also works. Okay, but really it's sales revenue minus sales returns and allowances minus cost of goods minus operating expenses, or as I said, gross profit minus operating expenses. And we get 13,440. Now moving on to the Crane Company. Okay, we don't know what our sales revenue is. Okay, but we do know what our sales returns and allowances is and our net sales is. So what can we do? Do a little bit of math, add those two together, and we get $116,000. And then now we need to find cost of goods sold. All right, well, we have our gross profit. Okay, and we have our net sales. So all we need to do there is find the difference between those two. 111,000 minus 49,000, we get 67,000. And now all we need to do is find our operating expenses. And that should be easy since we have our gross profit. Well, basically we have all of our information. We have all of our expenses calculated. And we have our sales revenue. So we just have to minus our expenses from our sales revenue. And that gives us a total of 34,600. So this moves us on to our second objective, which is with these values, we can identify what the profit margin is and gross profit rate is. And what these do is they help us know if we are what we're selling is actually making us money. So for the profit margin, the equation is net income divided by net sales. And so for Sheridan Company, when we do that, divide net income divided by net sales, we get 16.4%, rounded to one decimal place. And so then for Crane Company, we get 13%. And then for our gross profit rate, what we're doing is we are dividing gross profit by net sales. And I'll explain in just a second a little bit more what this means and what it can tell us. So for Sheridan Company, we get a gross profit rate of 33.8%. And for Crane Company, we get 44.1%. So let's compare these values, okay, to Wiley Plus really quick. and looks like we're spot on. There we go. Let's look at down here, and hey, looks like we're good. Took me a couple tries, a few tries to get that one. I had the equation a little bit mixed up. Anyway, so what's good about, really beneficial about knowing the profit margin and gross profit rate is the profit margin. It helps us identify, okay, how much money are we actually making after all of our expenses. And then our gross profit rate is how much money are we actually, taking from our actual sales. So our sales revenue of $90,600, and we could have, all of that money in sales, but then our cost of goods sold, for example, is $54,400. Guys, I'm really sorry, but I do not have time to redo this video, and it's I'm not explaining it really well right now, but I really do hope you get the gist of that. So the gross profit rate is really beneficial to see that. I'm sorry, I'm drawing a blank here, but gross profit rate is really good in the sense that what we're getting in sales, okay, and then what we're profiting from our sales. So okay, anyway, I'm gonna leave it at that. I think all of you get the gist, but anyway, that's that. I hope you learned well. Sorry it was so long, but thanks for your attention.